back with Bobby and JJ Radio. We have Pete Hero. He advises business owners and individuals on insurance solutions and retirement planning, and Miss Alicia Haff, which is a lawyer that has really had the passion to go after the Affordable Care Act and really know all the ins and outs for all small and large businesses. So Pete, I've heard so many things down in the grapevine of all this kind of stuff, and I've heard that employee family members lose their individual tax credit if an employer like myself offers insurance, even if the employer doesn't help pay for the. So like if I offered one of my girls' husband an actual some benefits, they lose a tax credit.
Yeah. Typically in the small business market, employers are pretty generous, and they offset the cost to their employees.
Right.
However, when we've got a spouse and dependents, and in the state of Texas, spouses are
I want to
considered
count Bobby my dependent,
right?
Usually, but.
Exactly. So we'll use Bobby as an example. If you offer insurance, not that the company is going to pay and offset that cost, you're just offering by virtue of you offering. That spouse and dependents who could be eligible possibly for a tax credit in the marketplace they're disqualified from receiving that marketplace subsidy just by virtue of you offering. Yeah, so I'll give you an example. Sure. I had one person, an employee that makes $50,000 a year household income, and he has a spouse and two children that stay at home. And he was quoted at work $1,100 per month for his health insurance, well over 20% of his income. Of course, that's unaffordable. And but however, if we went to the marketplace and we looked at what he would qualify for, he would qualify for a substantial subsidy, about nearly $600 for a comparable policy. And so his net cost for his household would have been around $350 a month.
From $1,100 to $350.
From $1,100 to
$350.
Right. However, because the company he worked for offered his wife and children insurance, they lost that tax credit in the marketplace. So it was a challenge. We won't call it it was a challenge that we were faced with, and we've tried to find solutions for.
Sure.
What are these solutions?
Yeah, I mean, it's the first one is about learning all the rules. I mean, that's really, and we've created a rule book, and I think we've had some of your staff attend one of our workshops and so forth, and where we teach a lot of the rules, and it's different for all companies because all companies aren't created equally. And so it's just a matter of understanding the needs of the company, what they're trying to accomplish, the needs of the employees, knowing these rules, understanding the new rules. Things have changed. It's not the old insurance marketplace. It's a new environment. And then working those rules to your benefit.
Well, I've got some solutions.
Sure.
Straight up. First off, this is called the spousal glitch. That's what it's known to be. But the long and short is it came down in the beginning of back to the affordability. Is the coverage affordable to the employee?
Right.
Originally, the law said, or the law was interpreted to say, is it affordable to the employee and family? Well, employers said, oh my gosh, if I've got to balance off of that, spousal and dependent care coverage costs a fortune. I'm going to have to shut my doors because I can't afford my side of it. So then the feds came back and said, no, it's just to the employee's coverage that's affordable. Hence now we're in harm's way. If you're a small group employer, make the coverage 9.7% of the employee's income. That allows the employees to send their families to the marketplace to go get subsidized coverage if they're eligible and get a better break.
Right.
In the large group environment, that's where the question is, am I going to offer dependent care coverage? Now, the law says you gotta, but it also says you gotta try. So until this glitch is fixed, working with someone, working with Pete and his group, or whoever your broker is that knows what they're doing, keep very close eye on what's going on, because there are solutions coming out on the regulatory side as well. We just don't know what we don't know what the end result's going to be, but it's got to be fixed.
But yeah, the thing about affordability is that if it's affordable to the employee, and it's all based on the employee only portion. So for instance, let's just say the premium quote is $400 for the employee only,
right? And
you're subsidizing half of it. Okay, so you're subsidizing $200, and the employee has to pay $200. If that $200 per month, which is $2,400 per year, if that is within 9.56% of their income, then that is deemed affordable for them. Okay, and if it's deemed affordable, then going to the marketplace, it has to be deemed unaffordable for that employee or their spouse and dependents to get a marketplace subsidy. If it's unaffordable, then the employer is actually subject to a $3,000 tax for their employees getting that tax benefit in the marketplace.
I can tell you, before we met with you, everything that we looked at was unaffordable to my staff. I mean, we went through ADP, I went through another independent broker, and every single...
not to talk bad about anyone.
No, I mean, I love it.
Yeah.
ADP's great. They're the best payroll company on earth, and we love them and all that. But, like, once we started to see, we were going through, like, friends and people that we've had on the show and show partners and stuff, and it was just totally unaffordable. Every time I saw that, I was like, I can't in good conscience like have my girls pay that. That's impossible. They have children. I know what they make because obviously I employ them. Right. And I was like, that's just too much. But anyways, we're going to be right back. We're going to really cover everything else that from Pete Hero and Alicia Haff. Do not move in this. Bobby and JJ Radio.